in your groups, but if you see, there is one like a group of empty seats here. So I would ask you maybe to move here, please, so you can stand up and shake a little bit. And then for you who are just in the back, if you could please join one of the groups, that would be great. Okay. Maybe if you want to join this group. Would you like to join one of those groups? Perfect, thank you very much. So I know that some of you weren't here before, and considering that and considering the purpose of this workshop, I'm just going to wrap up and let me just see how I Okay. Maybe a couple of things. So before we heard from different experts, the supervisor authorities, policymakers, the industry, that this is an urgent task. Yeah? Just to give you an example here for the case of Bangladesh, probably let's not read the case study right now. If you can all just have a look at these points to keep in mind during this discussion. So the first one is the urgency. Just to give you an example about Bangladesh. Well, it says that in 2050, 1 meter sea level rise could mean could imply inundate 18% of the country, and this will affect 27 million people in the country. So I just want to picture how urgent is this issue. That means as well, in terms of global GDP reduction, that 7.11% will be reduced in 2100. That's almost the double of the figure that we heard, that will be 2050. So that is going very fast. So we know that the issue is very urgent. Secondly, we know that insurance is just a piece of the puzzle. Insurance is not going to solve all the problems. Insurance is not the silver bullet solution for all of these. But we all heard from different views, supervisor authorities, policymakers, the industry, donors, and so on, that insurance is one piece in this risk management holistic approach. So it's very important to understand when insurance plays a role and when the other tools of risk management play a role. Risk reduction, risk identification, risk adaptation. So all of these need to be very clear in our heads. This is why, for instance, this morning we had the presence of one important policymaker that sometimes is not invited to these kind of events. It was a representative from the Ministry of Disaster Management and Relief, and he was explaining how important is insurance for them, and how important, and I quote him, he said, how important is to make sure that insurance is integrated in all the policies in the country, not only the ones on disaster reduction. So that's very important. So insurance is not going to solve the problems, but insurance is an important solution. We heard as well that sustainability is very hard to achieve when we're talking about bringing the private sector into all these discussions. So that's something that I really want you to have in mind during this workshop. We heard as well about these ambitious goals in terms of covering people. We know that recently the UN met, and the decision is that hopefully we will have 500 million covered through macro, meso, and macro solutions very soon, and specifically for microinsurance, 150 million. This is a huge challenge, and this challenge actually is not achieved only by one single party. It's not only the industry that will make this work. It's not only the donors. It's not only the policymakers. It's not only the supervisor authorities. Actually, all of us, we need to sit down together and try to find a solution, try to find the better ways to achieve this. There is something else that was said during this, in this morning. The focus on these achievements. So we have these ambitious goals, but there are two elements that we should really keep in consideration. First of all, the proper approach. We really try to focus to protect and to provide solutions to those who are the most vulnerable. And secondly, women. Gender approaches are very important. There are a lot of research that tell us that women, unfortunately, they are the ones who actually suffer the most of the impact of climate change. So it's very important to keep this in mind. As I said, this is only possible if all the parties get together. And we are not talking only of the national level. We're talking of the regional level. This morning, Luke from CIMA, he was telling us that actually there's a regional discussion with insurance supervisors from CIMA talking about how important is climate and how to make the discussion like more relevant in the region so everyone effectively do something positive to advance all these efforts. So this brings us to something. Public and private partnerships are key. And this workshop aims to make this obvious through the experience. I would say, based on my experience, and I'm going to ask your experience as well, putting together public and private partnerships, it's not easy. You could like maybe put them together at the beginning, but it's very hard to make sure that they continue. Why? Well, there are several reasons, but sometimes we fail to understand the mandates and the interest of each party. Sometimes we, as supervisors authorities, we don't understand that the industry has certain goals and certain mandates. Sometimes the policymakers do not understand that the industry has these mandates. And sometimes the industry doesn't understand what policymakers are trying to achieve with insurance, and also they don't understand what are the mandates of supervisor authorities. So it's very important to create a kind of empathy approach here, to understand a little bit what are all these parties looking for? Why is insurance relevant for them? I will give you an example, and maybe I will come to the floor to ask you some questions. I will start with Mathieu. Why the World Food Programme is interested in climate risk insurance? What is your mandate, and why climate risk insurance is relevant for that?
Well, our mandate is to contribute to ending hunger. And as I was saying this morning, climate change is actually affecting more and more people, so it's actually increasing the number of people who are food insecure. So that's the reason why we're interested in climate risk insurance.
So we see that the mandate of the World Food Programme is food security. But do we have anyone from the industry? I think that you're from Green Delta. Can I ask you, what is your mandate? Why climate risk insurance is relevant for you as an insurance company?
Well, thank you. I'm not from actually Green Delta. I'm from Guardian Life. Actually, insurance is required for covering the risks of the people or the community residing the bottom of the pyramid. So actually, insurance is not the only solution, but it could support them when they are in an unexpected risk or facing any catastrophe in case of any natural disaster. And as mentioned earlier, natural disaster is climate change affects. Here we find from your slides that only 1% change, 1 meter change in the sea level raises and causing the damage of the largest community in Bangladesh. So not only in Bangladesh, it's a third world country or the country residing the sea level, they are affecting through that. So ultimately, it's obvious that insurance is not the only solution, but it could be a support for the unexpected incidents. Thank you.
Thank you very much. Jakub, taking in consideration that you joined this workshop, I would really like to hear as well from you. You come from one of the insurance companies that have done a lot of work on microinsurance, now on climate risk insurance in Indonesia. What is the mandate? What is that element in your statutes in the company that makes relevant to work on climate risk insurance?
Okay, my name is Jacob from Indonesia. There are two mandates actually from the stakeholders. I mean, from the shareholders. First, of course, as private sectors, we need to bring profit to the company. But second one, we cannot bring profit if there's no one who wants to buy the product. So the product should fit with the farmers, and that is people, private and public partnership.
So a basic mandate. Now, climate risk is changing a lot of things. Risks that the unexpected happens, they will be covered so that things that happen will fall.
Governments are interested in joining these macro solutions. What do you think that is the mandate that they have, and why do they think that insurance could play a role here?
Well, first and foremost, they have to protect their most vulnerable people, the poor people, and I think that ties a little bit into the debate we've heard on looking into the industry, looking for profit. And the poor and vulnerable are probably not the target group that usually is focused at insurance industry. So through the support by the public sector, you can work towards solution to really address the needs of the poor and vulnerable. And also looking into the governments. I mean, they have the potential to set up a more holistic strategy for the country. I mean, they oversee the whole country. They see what they have to set in place for their population, in which level. So that would be something for the governments to frame really the conditions, to frame and provide an enabling environment for all the players to step in and to develop solutions. And ultimately, looking into the risk pool, it's a matter of let's say, to be able to respond fast right after disaster has struck. But on the later, on a longer term, you also need to have the private sector players on board to develop sustainable solutions at the micro level, provide insurance for the individual, look into the cooperatives at the meso level, communities that also can pool the risk and develop appropriate solutions. We do have in the partnership some examples already. So I think, yeah, but you need somehow the impulse, and that can be also provided through the governmental authorities.
So they need to have this interest of bringing insurance in this approach of risk management that could be layered, could have like different elements where insurance effectively can play a role. But something very interesting that we have seen in terms of policymakers, and we saw it this morning, this is relevant not only for ministries of agriculture, or ministries of finance, or ministry of the environment. It's also relevant for a wide range of ministries. For instance, the Ministry of Disaster Risk Management, he was this morning speaking about the relevance of this. So it's very important to see that when we talk about policymakers, it's not only the Ministry of Finance, who probably will be the one who just issue a financial strategy of risk management, but also other ministries, and it's important to keep them aligned. Before finishing, who is missing here? I have been talking about the industry. We talk about the supervisor, policymakers. Well, we miss the perception of the donors, but we'll see how we fit that gap. The academy. Dan, why is relevant to move forward with these solutions? Why you consider that this is something that you could do, and why?
Yeah, I was afraid you were going to remember universities. Yeah, so of course, as a mandate, we can do research and education. And so our role in insurance and our interest in insurance are based on those two things. So although we often are involved in the nitty-gritty operation of the insurance projects, that's not our mandate. We can't calculate the kinds of things. We have a lot of cheap student labor who are supposed to be cheap because they're learning things. And so we tend to exploit projects to try and learn things that we can publish, or to train people or to train students. And I think there are tensions in the way that we relate to projects that need to be, people need to stay aware of, because we have that mandate and that perspective. And of course, it's not only me, but others like me.
Thank you, Dan. So we see that actually all of these access or participants in the chain of insurance have completely different mandates and completely different interests. So it's very difficult actually to put together partnerships where everyone can achieve what they are aiming to. And I think that someone very important in this discussion is missing, the consumer. What the consumer wants with this solution. And I'm going to take advantage that Nurul is here today because in June, we carried out several demand studies in Bangladesh. And you heard the perception of a wide range of people in Kurigram and in Shirajganj. And I just wanted to ask you a question. What was, in your opinion, the main concern in their lives, and what do you think that insurance can do in that respect? What will be that reason why we really need to offer insurance to them? Why?
Well, thank you, Andrea. The good question. Particularly, we did an assessment in June. It was in June, yeah? And this is the most vulnerable area in Bangladesh. This is the river-prone area. So most of the people live in the river island. And their experience, every year their experience on flood. So sometimes they face the catastrophic flood. So during the flood, they lost their crops, they lost their livestock, they lost their household assets, and sometimes they lost their lives also. And apart from that, they also lost their wages, because during the flooding time, they don't have the work. So that's another a challenge they face. And this is during the flooding time, they passed a very hard time for them. So the issue is that even they face some other problem. There is some health hazard. So during the flooding time, there is a issue of the snake bite, and there is the issue of the health issues for the people as well as for the livestock. That's the issues during the flooding time they face. So they are interested to how they can protect themselves through the flood. Even apart from that, also river erosion, also another challenge. So they want to get support from the government or from the TURA, from the UN agency, even from the private sector to protect themselves so that they can reduce their loss of crops, loss of assets, loss of their lives. So that's the issues came out from the discussion we did. But challenges, particularly the low-income household they are living, challenges, they don't have the affordability. As I mentioned in the morning, so they don't have the affordability, particularly if we talk about the insurance. End of the day, we want to engage them to risk transfer mechanism. There is the issue of the premium. So they don't have the capacity to pay the premium. So they don't have the subsistence income. So that's the issue, and also awareness. And third issue is, I mentioned, the trust. These are the three things in the demand side, so particularly in the low-income household they face.
Thank you very much, Norul. You mentioned something that is very important. Well, you mentioned a lot of things that are very important, but I wanted to point out on two. You talk about protection. They don't say, I want insurance, because most probably they don't know what is insurance and they have never had insurance in their lives, but they want to be protected. So that's one element that we need to consider. Then the second element that you mentioned as well is like they want to reduce, minimize their financial losses. And this is where insurance plays a role. So why I'm talking about this? I just want to draw your attention to that slide that basically aims to have a summary of all these stakeholders that need to participate in the conception, in the implementation of any climate risk insurance solution. And all of them, as I said, they have mandates that are different. Their interests are different. But we really need to remember in all this process what consumers want and how do we protect them directly or indirectly. So just before starting the analysis of your case study, just keep in mind this. All of them have different agendas, mandates, and objectives, and we are not going to change that, yeah? We need to make sure that they are part of this. We cannot engage in solutions without them. So we need to be very clever and strategic in making sure that public and private partnerships work. So it's very important to always have in mind that even if, for instance, let's say the industry right now is not very interested, me as a government, I'm going to end up doing it by myself. Maybe let's try to find ways of making sure that the industry is incentivized and bring and offer this kind of solutions. So let's keep that in consideration. Well, having said that, I now want to draw your attention to the case study that we left in your groups. In the chairs. Do you, all groups should have like 2 copies of the case study. Do you have them? All groups have the copies? No, you don't have copy? Okay, so we will make sure that all of you have the case studies. Yeah, you do? Just one? Okay, I'll find out. Yeah, 2. Anyway, I'm just going to go very quickly with the case study. And what I would like to do with this case study is that in each group, make sure that someone represents the voice of the supervisor, that someone represents the voice of the industry, that someone represents the voice of the policymaker, that someone represents the voice of the consumer, and let's join the part of the consumer with the research. So, the first element of this case study is this. So I'm now talking about like the representative of Village Coop. This is a cooperative that brings together fruit and vegetable growers and shopkeepers. So you see, it's not only farmers, but also shopkeepers in Khartoum region of the country of Patonisha. 80% of their members are women, and they generally do not have IDs or land titles. Actually, most of them rent the land where they produce, and most of them have access to mobile phones. In Village Coop offers productive loans to them, savings, cash remittances service at the domestic and international level, and also some technical assistance. These are the numbers. I'm not going to go through that because you have them, but just keep them in mind. And interestingly, when they provide loans, actually, these loans are not generally offered to women because they don't have IDs. So generally, it's the man of the family, a man of the household who ends up having the loan. Village Coop is a cooperative used by the Patonisha government to handle the cash transfers to 7 million beneficiaries nationwide. The region, Khartoum, is subject to droughts and floods, with these disasters affecting actually the business of Village Coop. The Khartoum is located 3 hours away from the closest administrative center and has the highest levels of illiteracy in the country. Every time there is a natural disaster, Village Coop struggles with their portfolio. And generally what happens when there is a natural disaster, people from the region come to Village Coop to ask to borrow money, like emergency loans. But now Village Coop is not really having the funding to do that. So this situation has led to something, to start stopping the provision of loans in that region, which is very adverse to them because that means that they won't have access to finance to be productive and so on. Village Coop members generally use loan sharks and dip into their savings whenever there's a natural disaster. The productivity plummets every time. So Village Coop is a little bit tired of this situation, and they don't want to stop providing these financial services, this access to loans to the people in Khartoum. So they knock at the door of an insurance company in Patonisha, which is Pato Insurance, and ask for solutions. Unfortunately, Pato Insurance, they don't have the capacity, the knowledge, they have never designed a solution like that. So Pato Insurance end up speaking with one global reinsurance company that set up some conditions to design a solution. So I will invite you to discuss in your groups the questions that come after the description of the case. And I would like you to use the flip chart because at the end of your discussion, I would really like you to explain what have you decided, what was your answer, and why did you do that. So is that clear? Do you have any questions? No? Okay, well, good luck. There will be a prize. Okay, please start the discussion. We have, okay, yeah, good point. ¿Crees que una hora? 40 minutos. Tenemos hasta qué hora. Yeah, I think that's reasonable. Yeah. Okay. You have until 3:30. Okay. So you have like, yeah, 40 minutes more or less.
So we're not trying to be in the skin of someone else, academics or...
Well, the idea is that at least in every group you have like someone who will play in the role of the supervisor authority or like also the consumer, the industry, because probably we don't have here like representatives of all of them. So the idea is to make sure that you are aware of that mandate that means that the industry has, and therefore you will be able to answer these questions also from their stance. So it's a kind of a role play. Yeah. Yes, yeah, you decide what to do. You want to join one? Well, I have good news for you. You have our flight coming.
For insurers number with single mechanism. Collective premium they send someone to large sum of ensure that technology can integration. But there is some points over here because it's
reinsured by insurer because distributes at possible yield or
It also needs to be
to have a little I think one point about trying brought by the Vesopro.
We don't have to have complicated.
Because
Can be translated.
So if you see something that you should say about one of the points, please feel free to do it. The idea is to start the discussion, to share what you thought about some of the elements, so please free to participate. So let's start with the first question we have here. So the first question is related with one of the requirements of the reinsurance company, that the product needs to be scalable and financially sustainable. I mean, this is one of the elements that not only a reinsurance company is interested, but all the parties. We have been talking a lot about pilots, about the solution and the other, but actually we want to scale up. We had these ambitious goals, 500 million people covered very soon, so certainly solutions needs to be scalable and financially sustainable. here we have the target market. So we know that in this particular product, this is interested on focusing on women. So could you please share with us what segment or which members would you cover, which are the ones that make sense and why?
Hi, everyone. So in our group, we had a pretty lengthy debate for more than half of the time about who we should really cover by this project. In the end, we decided to cover both the growers and the shopkeepers, and to target the women specifically, despite the barrier that insurance can only be sold to those who have ID cards. We toyed with the idea of a group policy, but that's also before we saw that we weren't allowed to sell a product at the MISO level. So because group insurance isn't permitted, and also it was the strong recommendation of the regulator that for products like these to be most valuable to the policyholders, it matters that the product is directly benefiting them. And the regulator wasn't of the perspective that group policies that go through cooperatives or MFIs like this are often able to provide the greatest benefits to those individuals. So we decided a direct insurance product to the female clients of the MFI, and both growers and shopkeepers. Is that enough for this question? Thank you.
What about the other groups? Did someone pick the same approach? No? You pick different approaches? Okay, good. We're going to go later with that. Okay, so now the second point is like, how would you confront the operational limitations that women have?
So the biggest limitation we saw in this was the fact that in order to sell the product directly to the women, they needed to have ID cards. And we discussed that within these types of communities, often there is some sort of informal way that you can identify persons. And while it said that they needed to have ID cards, it didn't really say that it was some sort of national or official identification. So because they're already customers with the bank and they may have loans, we decided that that type of identification, the institution itself could issue some sort of unique number or something like that would identify an individual who could then use that in order to access the insurance. And the regulator was okay with that as a kind of a pilot approach. Something that we also, that we also considered was that, and this is something that we discussed just before the session, and it was that, governments also have roles to play in making sure that these types of things are feasible. Because it's something that we need to get done quickly, it wasn't realistic for us to say that the government will provide or issue ID cards to these women, but it's definitely something that the government should work towards in the future. So until that time, we can work with these kind of temporary IDs, but eventually work towards developing identification for the women.
Great, thank you. So we see here like three things. Well, certainly the regulatory framework was an obstacle, but not only the regulation about insurance. We know that group insurance, the fact that group insurance is not permitted for non-life is a big obstacle, but ultimately this limitation on IDs and also the sole fact that women do not have them, it's effectively something that raised your concerns. You mentioned that the supervisor was very open and interested to allow a test and learn approach. So this is something that is very interesting to highlight, because this situation, even if you think, oh my God, where did you pick these ideas? Why like so difficult, this regulatory framework? Actually, there are countries where the regulatory framework is as harsh as that. So we have to find the ways to solve these, and certainly the dialogue with the supervisor authority is key. So great, Luke, you effectively were very open here in the discussion, and you allow the possibility of designing something that is innovative. Norul, I think that you have a question?
Yeah, not question, just I want to add regarding what does the representative of the supervisor think about the proposed solution? Particularly question number 1.1.2, yeah, we are discussing about the issues. So issue of the land title. The women, they don't have the land titles. That's limit their access to the financial product or services. That's the issue. So for getting the for receiving the ID card or land title, it's very complex issues. It's not easy to solve within a short time. But they don't have the land title, but they have access to the lending the land. They are involved in the production, crop productions. So we can also propose to the regulator so that allow the sharecropper to get access to the loan. That could be the alternative option. That could be more feasible than to advocate to the regulator to get them the land title or ID. So it will be very challenging and difficult. Better we can propose them to access to the sharecropper or shareholder. Thank you.
Thank you. Yeah, that's a great point, because we need to think out of the box how we can cope with this obstacle, and at the same time bring these ideas to the supervisory authority to see if they can effectively help. And sometimes I said the regulation is not about insurance, so it's important to also highlight that supervisors have this kind of relationship with other regulatory authorities, and they can effectively promote awareness about the obstacles that these kind of regulations are hindering the development of these type of products. So, before jumping to the second point, do you have any concern about the approach that this group is taking? Well, we know that they are focusing on the farmers and the shopkeepers. Do you think, and then we know that will be a microinsurance product that will sell directly to these communities. Is there anything that brings to your attention, maybe why you didn't take that approach?
Microinsurance product is for sure a solution for this particular community, but I think from my consent and from our discussion, partnerizing is more feasible for reaching to the largest community, because in case of penetrating a large community, because in case of microinsurance, we need a large pool to minimize the premium and make the particular product affordable to the group. So in case of partnerizing, what could happen? Insurance company can use the facility of his partners, and with a set group where insurance company cannot penetrate easily. For example, in case of cooperatives, all the loan holder of the cooperatives could place under the pool of microinsurance if the insurance company have the bilateral agreement. But here is a hinder in case of this particular country, because group insurance is not allowed here. So the partner could be an aggregator at the first place, and the regulator could be a little soft to ensure this particular mechanism and sharing this particular risk pool to the large group at a single contract. So, in summary, partnerizing model could be more feasible to address this large community.
Maybe just to connect this comment with this, I think that ultimately here the cooperative will be part of this. I mean, could be more or less the same model, but I wonder if ensuring not only, because here we have then that we will have agriculture loan, like the borrowers for agriculture credits, and more largely productive credits, so we'll have around 21,000 people. So would you ensure the same target market, or would you ensure another segment of this population that we had here, for instance, the clients of the savings, cash remittances, or even, so we will go with which one?
Well, microinsurance could be developed under 7 mechanisms. One could be a credit shield, so who are taking loan from the cooperatives. Other could be the savings shield, that means the service protection mechanism. Based on the savings, a microinsurance proposition can be developed. Still, it's been operating in our country here in Bangladesh, so it also could be replicated to this country. And of course, in case of remittance, you'd be happy to know that in Bangladesh there is a microinsurance proposition for the remitter, in case of exchanging the fund from coming from abroad. So we can, as an insurer, we can target a large number of group. If we have the large number of population in this particular pool, ensuring the premium. So in every cases, in case of if we find the microinsurance, the premium contribution is an issue. So if the premium could be contributed through the government and the insured through joint contribution, then it's easier for the insurance company to offer the microinsurance product for the large communities.
Okay. We'll go later to the affordability and who pays for the premium. Norul, you had a question?
Not question. Comment? And you have already provided some question to us. So now the time to answer the question. So particularly regarding the question number 1.1, you are discussing about who could be the policy holder. So in our discussion, we found, because if we think about the inclusive insurance, if we want to engage the all segment of the people within the community, because women already, they have challenge, they have some limitation to get access to the insurance product because of they don't have the land title. So in that case, the cooperative, place cooperative, could be a potential policyholder to protect all their stakeholders, because they are serving the agricultural loan. They are also productive loan for the shopkeeper, and also saving product for the shopkeeper and growers, and also cash remittance. So they could be, protect all the lending portfolio, what they are providing service. And the ultimate beneficiaries, they could be indirect, not direct beneficiaries. So in the case study, you have already clearly mentioned, so when drought or flood happen, so they face challenges to provide the emergency loan. So if the the Blaze Cooperative, they protect their own portfolio through the insurance mechanism. When catastrophic event happened, they could receive the payout, and this payout they can use to provide the emergency loan to the beneficiaries, and the beneficiaries can invest their money in the productive activity to restart their agricultural activities, restart their business, restart their business. So that's where we can think to develop a meso level protection mechanism, not micro level. Thank you.
Just want to add some points with my colleagues. This is a win-win case while we are thinking about to work at meso level, because here at one point, if we think the very micro insurance, the repayment or the payment process could be very difficult for individual insurance service providers, service takers. And on the other hand, if we think about the government side, once we are thinking that the meso partners is shouldering the risk, it ultimately easing the process for the government as well, because government with handshaking with the meso partners could transfer its risk to the transferring the risks through meso partners to the micro partners as well.
Okay, well, that's a very interesting approach, because here basically we're protecting these communities, but indirectly through a meso cover. This morning, Astrid precisely presented that there are like 3 levels of protection that could be provided. Could be macro solution that targets mainly governments, but also you have meso solutions that in this case will be targeting the cooperative, microfinance institutions and so on. And then we have the approach that was taken by the first group that was like really microinsurance. Luke, yeah.
Just to add something, and also to give some question, not to answer actually now. I would like to. I'm always amused when we speak about barriers to reach low-income people, especially to sell the products. And when you say you cannot, it's difficult to reach them, to get them sign up a product. you also say that it will be difficult to reach them to pay the claims. And finally, what we witness is that sometimes we have some scheme that cover the capitals of microfinance, donors, and so on and so forth, but the actual low-income people are not touched by the product. So the reason why we try to go directly to a product that target the low-income people is that despite the barriers of ID and everything you want, they are the main person who need finally to get coverage. And it's good to keep in mind that it's not only about the loan, it's not only about the money that the bank has given and the bank is afraid to lose money, but it's ultimately the lives of people behind this thing. And even these people don't have ID cards, they have identity. You know, yesterday I spent 3 hours at the airport because I need a stamp in my passport. And when I got the stamp in my passport, I'm allowed to enter Bangladesh. But just figure out I lost this passport. I will still alive, I will still there, I will still in the country. So I'm exist, I'm really there. And we need to have in mind that even this paper that doesn't have these papers that we use to identify them, they exist, and there are many ways to touch them without these, I would say, bureaucratic papers.
Thank you, Luke. You really raised a point that is extremely important. How do we make sure that is in the solutions, macro, meso solutions, actually those who are the most vulnerable effectively are protected, effectively receive like a benefit? How would you answer Luke's concern? What do you think that you could do in your product design in order to reduce that probability and make sure that the individuals receive what they should expect and to be protected? What do you think that you could do? And maybe while you think, I will ask Mathieu. What ARC does in terms of like the macro solution? Are there any plans that are set up in order to make sure that that money that the government receives is effectively distributed in a certain way? How does it work, and maybe how does it differ of other mechanisms like the CRIF, for instance?
Well, so with ARC, because there is this operational plan that is approved by the board before any payout can actually be made, all the payouts have to be made within 6 months, and after each payout, there is an external evaluation. In addition to that, there is also like some M&E system that are in place. So I mean, I couldn't assure 100% that all the money goes actually to the end, but I think it's pretty straightforward. And then the response is re-implemented. The thing is, it's still like one little piece of the response, and it still has to be understood in like a broader plan, which is not always so clear for the government. So, but yeah, it's evaluated.
Thank you. And I might like maybe bring another example that is very recent, the CRIF Coast. I don't know if anyone have heard about this model. What do you think that the Coast model does differently and actually makes sure that the fish folk receive like payouts? What is the difference there compared to ARC, for instance?
As far as I understand with the Coast project, the nice difference that it has is that it's paying out directly to fishermen, or at least directly to the cooperatives as a fisherman that then pays out directly to them. And this is something that's really needed for them, because often the payments that CRIF SPC is giving out is for the government, is for the immediate response and for the infrastructure, but it's not all the time used for reaching the end users, and that type of support often comes much later. So with Coast, the government's able to get support to these groups in need at a much quicker pace.
Thank you. So this is actually great, because we're moving forward to a stance where there is a list. The fishermen are registered, and those fishermen who are registered are the ones who ultimately will receive this payout through the government. But you see that there are plans to distribute payouts?
actually, from options, and we can say our flood insurance product during payout distribution, and the MMS as the local implementing organization or MFI, actually he as MFI was the insured on behalf of the community. So 1,661 beneficiaries or household got the money through this MFI. They distributed the money to the doorstep of the houses. They had the mechanism, they had the volunteers, there were the CBOs on village base. Each village base comprised 50 to 60 people. So money was distributed to CBOs. CBOs distributed this money to households.
So it will be like the MFI, he will be distributing the payouts. Maybe something that is interesting to differentiate. Meso insurance is different to group insurance in microinsurance. So ultimately, MFIs can operate the distribution channels in a microinsurance model. They could be the policyholder of a group policy. But what really matters in this meso cover is that ultimately it's the cooperative or the MFI that is being protected. So that's very important. And effectively, they can find ways to make sure that the members, the clients receive the payouts. I wouldn't call them now payouts because effectively they are not payouts for them because they are not really the beneficiaries of any product, but ultimately indirectly to be protected. Now I would like to ask to this group, what was the approach that you adopted? Who are you targeting with your product?
Actually, we are targeting all of them. I think there are two main reasons behind it. If we see the function of a cooperative, it still got the very traditional approaches of insurance, which means subsidiarity and solidarity. So the intention is that, of course, the good risks support the bad risks. Okay, some people don't like it, but let's say I think that's the best way to get it on the one side. The other way is, of course, the discussions we had is what kind of insurance should be set up. In order to reduce the administrative costs, everything that is related to it, the cover should be made in the name of the cooperative, who then has to either insure, let's say, sell it or give it to the members. That was the main intention.
So this will be more or less similar to the group one. It will be my microinsurance cover, but won't be targeting only the shop, like the small and micro entrepreneurs and producers. So it's a broader one, but it will be still a microinsurance product. Okay. Okay. Well, let's start with the second set of questions. What would you do? And actually, it's very relevant for this decision, for the group that the decision adopted. Would be a voluntary, a mandatory product? How would you structure it in a way that could be sold like that? What were your thoughts around that?
I think the general question whether a cover should be mandatory or voluntary is a very awkward one, because there are certain covers mandatory, let's say, if you talk about certain fields where there's a certain demand. I think now I'm heading up a little bit, but the intention is more that it will be part of the membership of each union member, which is then some sort of mandatory, but he doesn't have to become a part of the union. But I think this is the only way to scale it up, make it scalable, and also to make it more attractive for an insurer. If we're just talking about, what was it? 6,000, that's hardly any premium, so no underwriter would really like to cover it. So we have to increase the numbers in order to find an appropriate underwriter to sign the risk.
Thank you. Okay, so that's very important. You mentioned like the word of the day, scalable, like financially sustainable. And Luke, you mentioned in your presentation precisely, you mentioned how important mandatory products could be, and we should really think about them. So would you like to share some thoughts?
Yes, once again, here we are we have in face a social problem, and you see the loan, that's true, but even these people don't have some official ID. They are bound by legal obligations. So when a low-income people take a loan, it should repay, and even there is a drug or inundations, is remained bounded by the the loan. And sometimes what we see in some countries is that the microfinance is able to take the least resources that this person has to cover the loan. So having this insurance mandatory is a basic social solution in case of this catastrophe to make sure that beyond the loss of crops or I don't know what of income, this family, the family of this low-income person who take the loan is protected. So that's why I agree, and I will go for a mandatory solution product for this situation.
Thank you. And now maybe I would like to ask a question to Kate, because consumer protection is effectively a concern when we talk about mandatory and voluntary products. We all know that effectively we may need to make sure that clients provide their informed consent and so on. How would you think that we could achieve like a middle point with this? I mean, we need to achieve to scale. We not only scale, we need to protect the most population that we can. But at the same time, we need to make sure that consumers are effectively protected, that they have the agency in all this process. What are your thoughts around that?
Well, I think that there were a number of points that came out of our group discussion that are relevant to this. That in a way, it's helpful that the supervisor has quite a few levers and has to kind of give permission for how this can play out. And in the end, our supervisor was willing to use a test and learn approach and to rather actively observe a pilot and see how it worked. And that gave an opportunity then to address the issues of transparency, potentially of value, although we didn't discuss it so much, and of payment reliability, claims reliability. So I think that there's more than one way to make things happen. And the point that if it is a compulsory product, it does put more burden, I think, on the supervisor to ensure that it's a good product, carefully explained, with the incentives well aligned, and with an efficient back-end process, because after all, you're imposing a cost that has to come with a value to very vulnerable low-income people.
Okay, so here, how important value of the product is there, that the client effectively receives that and make sure that in all this process they are very aware. The fact that the product is mandatory doesn't mean that the communication should be there. It's basically the measures. They need to be communicated, they need to know about the product, even though the solution, depending on the jurisdiction, will be that there will be a mandatory.
And just one more interesting point of discussion was around whether Village Co-op could be the broker or not. And I think there we said, you know, in different contexts, there might be a different solution, but let's be very careful that the requirements are, there's adequate information to the consumer, and there is, the incentives are aligned, and that the claims process works. So again, you can have different kind of institutional arrangements, but be clear on those core principles that must be met.
Yeah. And now that you mentioned the distribution channels, effectively, if they are going to be the ones who deliver the product, they need to be as well trained. They need to know about the product, so they will be in a good position to transfer information to consumers and so on. So that's very important for inclusive insurance and climate risk insurance in general, because we have a wide range of distribution channels that are not insurance professional distribution channels, like let's say a broker, an agency, an agent that need to comply with certain requirements. So this is very important, because we have all this wide range of newcomers who are not aware about insurance, but even though it's important that they distribute them in a certain extent. So for this group, what was your position? Is this a mandatory, a voluntary product? What did you decide?
We didn't discuss that aspect, but others.
Okay, and after the discussion here, what do you think that will be the approach that you will adopt?
I think
Well, thank you. since it's a question for scalability, so insurance company always go for calculated risk. So scalability is a matter here, and to make this particular proposition affordable, we need to have it mandatory, because a large community with a single pool. And another important factor is that in case of receiving the claims, if there is some exclusion, some of the in case of expiry, death, if a natural disaster happens and someone expires, so if this particular issue is not shared to his family members, he or she would not understand whether this particular person is covered or not. So if a total group of the people is covered with mandatory insurance, everyone will be aware of that. If something happens, he or she is covered, and then the family members who are the nominee will be able to get the insurance benefit, and for ensuring the economic product offering, at the same time ensuring the claims settlement, I think mandatory is a good option for us.
Thank you. Well, what about this group? What do you think? Mandatory, voluntary, sorry.
The way we have designed our program, we think this is not ready for the mandatory option. On the other hand, we are also thinking that the consumer who will take this service, they're not enough aware about this service. So if anything imposed directly or abruptly, that will hamper the overall business case. Since we are thinking this product as a business case for a meso partner, so it should not be mandatory all the way.
Yeah, okay, this is a different approach actually, because you're taking the meso cover, so it will be you who will be, well, the cooperative who will be insured, and effectively all these consumer protection concerns are reduced. It's the financial institution that is being insured, not like the client.
Just want to add another point. So our plan here, we discuss in team that we want to show some good practices first, and then the practices will be replicated systematically, not very abruptly.
Okay, and let's go back to the group number one. What was your decision? Voluntary, mandatory?
So similar to a few of the groups I think we heard, we decided to go with a mandatory product for the borrowers to the institution, which means that for people that do the remittances or the savings, they could perhaps buy the product on a voluntary basis. But in terms of the regulator's perspective on that, he continued to reiterate the importance of making sure that the clients are aware that they are covered by this insurance, and also that will enable them to make claims, because if they don't know that they have insurance, then they don't know that they're entitled to any kind of benefit.
Great, thank you. Okay, let's go to the second set of questions, which is affordability. We have heard a lot about affordability today. So what steps would you take in order to make sure that this product is like well designed, provides a good coverage, but still is affordable?
Well, basically, so the first thing was to try to simplify the registration process. So yes, we cannot do, the signature has to be like on paper, but then we're suggesting there are some forms that you can actually fit in and then take a photography, and then actually the data is uploaded directly. So that was one of the first thing. Second thing was actually to use mobile money.
Electronic transfer.
Yeah, electronic transfers to actually collect the premium and also settle the claim, to make it like faster, more secure, and also like hopefully cheaper. And to go for parametric insurance just to reduce the overheads overall.
And how was the dialogue with the supervisor authority who was in your group? Because we know that index insurance is not allowed. Well, this approach of like taking a snapshot or picture of the form, it's quite innovative. What was the position of the supervisor authority? How did you feel about that? Sorry.
It's not allowed, it's not acknowledged.
Okay, well.
Well, I think that's what Luke was saying before. It was like, we want just to be informed, to be kept in the loop so that we can learn, and ultimately when there is like the next step, then we can take like a formal decision.
Okay. So here what is very interesting is that the fact that you're in a test and learn approach, like in a kind of a sandbox, allows them to test and see what's happening. Okay, that's a very good approach, because not only in InsurTech, but in the last, I don't know, 15 years of microinsurance, we know that actually it's through pilots that the industry learns, but not only the industry, also the supervisor authorities, policymakers, and so on. Okay, what about you? What did you, how did you think that you could make this product affordable? What kind of elements you should introduce? Well, come on.
Well, in this context, we discussed the following. So we had different roles in our group representing different stakeholders. I was representing the government, and in many statements it was said the government should play a very active role from very different angles to make this product somehow, well, feasible or affordable. Yeah, and in this regard, I think there was one little interesting hint in this case study saying, just have a look. Every time that there is a natural disaster, how much is every time? Annually, every 2 years, 10 years? So what disaster, if we look at the Philippines, the typhoons or the floods in Accra, so they happen very, very frequently. Is that insurable? Yeah, I mean, that was a debate we had in this round, getting into technical details. But what actually is insurable and meaning affordable? Mia was representing the household and the small shop. So what is she going to get in case of disaster? And all the time we said, well, first of all, the government should provide aid measures, first aid measures, and so on, because I mean, if the whole house is gone after a flood, if she just gets money for a door, it doesn't help her much. So that was more the debate we had, besides the technical issues my colleague already summarized. But this is, I think it's crucial, and I think it's rightly so that people are saying, in the context of climate change, high frequency, stronger event, etc., governments should play and need to play a very important role, crucial role, and should not put, and also we, as let's say donors or whatever you want to call it, we shouldn't put it on their shoulders. I think that's also unfair.